Alright traders, I'm back again with another video, and today I'm going to take time and talk about what's going on in the market, what we see happening with the Ichimoku system, and we're going to get started here with the US dollar yen. We're looking at the dollar yen right now, and this dollar yen has been faking me out lately with the last few trades I've tried to do with it. Actually, I haven't gotten into a trade because the last few times I've looked at it, it hasn't done what I thought it would do. Okay, so now we're looking at a point where it's at this equilibrium level right here at support, finding itself at the Kijinsen. So that's very important. The market's in equilibrium now. So basically when we're talking about equilibrium, we're saying we're between the excess supply and excess demand, oversold, overbought. We're in between those, in between that level. Basically the market is neutral as compared to what the market bias is. It's neutral. All right, so that's what equilibrium pretty much is, with the market being in equilibrium, and we're right there. So nobody's really controlling right now. Nobody's really making any decisions, but eventually somebody's going to have to decide to get off of this level here. So this is where the market talks to me. It talks to me at support and resistance levels. That's why I like to use those levels to get into a trade. I don't like to use anything else but a support and resistance levels to get into a trade because I don't want to be left out hanging. So I try to find a level like this. Now we're bouncing off of this support level here. So we're going to wait and see what happens here with this next candle. You could see the big wick here. This is my Kijinsen here. And then I'm at the second level of Ichimoku support and resistance. You could see we pulled all the way down and went to the third and fourth level. Now these are very thin clouds right here. So if the market does break down here, this thin cloud isn't going to be a lot of resistance to it. But also, actually it won't be a lot of support for it because actually it's going to just break right through that level maybe. But see, also the thing about it is that you have this flat top right here, and this flat top represents a strong level of support and resistance too. So take note of that. So the market still has the ability to move back down here and then maybe find something down here to find some support. Now if we can hold this level here at the Kijinsen, this is where we'll look for a trading opportunity. So this is on a daily time frame. We need to see what's going to happen at the end of this day, and then it probably won't make too much of a difference to me because tomorrow's Friday, and I don't really get into trades on Friday, especially on the daily time frame. Now maybe the 4-hour time frame I would, but daily I just definitely probably have to wait till next week, see what this is going to do, and then by then it might be too far from where my level of stop loss is. So hopefully the market just hangs around here and just sits around until it gives me an opportunity to get into the market next week. Now I was talking about these long wick candles here. You could see there's a long wick candle here at support and resistance. Then you had this long wick doji here sitting right at this support and resistance level. You could see these long wicks here. They're not super long. These are, yeah, well actually on a daily time frame these are nice levels. But look at this wick here, and then look at this really big wick here, and then look at this really big wick here. So you could see a few things that this US dollar yen does. When you see these long wick candles, usually they do hold true for the market to have a reversal of where it was going. So the market was moving down here, hit this long wick candle, and it showed you that this level was support, and it moved on up and took off of that level. That long wick candle held support there. Here you can see another long wick candle, and we'll get in tighter with this, and you can see this level, and it's hitting off of the resistance of the Kumo cloud, busting up at the Kijinsen here, and it's a really nice long wick candle. Beautiful trading opportunity, and the market drops, and here you could see another nice long wick candle. So the market, it seems like the dollar yen, when you see these long wick candles, they're kind of like a sign that maybe that level is going to hold. So sometimes you see that, and that's what I see here. I see this nice wick candle, so maybe this level is going to hold and the market moves up. So now I have to just wait and be patient. This is where patience comes in. Now I can be aggressive and take a trade right here, put a stop loss a little below the cloud right here, and that wouldn't even be a bad idea because it'll keep my stop loss shorter, and I'm expecting this level to hold true. Okay, because we're above the Kijinsen, we're above the cloud, so we're bullish, and our short-term momentum is bullish because we're above the Kijinsen. So basically putting a stop loss there and getting into a trade there wouldn't be such a bad idea. Um, that's going to be it on the US dollar yen. I'm going to hold true and wait, see what happens with this pair. I'd like to see some momentum for the market to move up because basically we're not in a trend at all, really. It's just in this terrible formation here, basically in this consolidated phase, and terrible price action for me to really trade. I mean, you could get some trades off of there, but nothing to look for a long-term trade here. So I'm just going to leave this go till I can get more of a clear understanding of what's going on with this market here. So that's US dollar yen, and we'll move on and check out something else. So we'll look at my favorite pair to trade the Ichimoku system with is the Euro Yen. And right now it's really not giving me much of an opportunity to get into the market right now. But if you could look here again, you see another long wick candle. These things seem to appear and be very good to trade off of. And now this would have been a great trade off of a support and resistance trade, but not trading the Ichimoku the way I'm trading. I could have taken of a counter trend trade here, but you know, a counter trend trade is just taking a little pullback trade. So I didn't take that trade, and price came all the way up and hit this Kijinsen. It hit the bottom of the Kijinsen right here. And I saw this happening yesterday because we're on the 4-hour time frame, and you know, I really wanted to get into this trade, but I had other things on the table, so I let this go, and it turned out to be a decent little trade here. When I seen how far back this pulled back, it took me a little bit away from my Kijinsen where I like to be. But being that this is the 4-hour time frame, let's see how far away we were. 23 pips at most, 30. We could have put a 30 pip stop loss above the fractal level here. That would have been a good trade to get into, and it wouldn't have been too bad. We were close up against this support level here, so you want to at least have a, you want to at least, that would have been just 1-to-1, and we're kind of in the middle of support and resistance. That's another thing I don't like to do. You're in the middle of, here's your resistance here with the cloud and the Kijinsen, and then you got a bottom support level here. Well, price broke through, but now it's attempting to come back. Now this is what we're going to be looking for. This is another way to get back into the market now, to give you a little bit more of a, sureness that this market may move. But then again, and nothing's really a certainty with the Forex market. So we'll look for the pullback level. We'll look for a pullback to this level, maybe even break that level. But then when it comes back through again, then we can look to get into a trade. So we're looking for this level to hold resistance right here. And if that level holds resistance right there, then maybe we could get into a trade. Now we're getting a little far from our Kijinsen, and that's going to be our stop loss level. So, do we even think about getting into the trade there now? Because it's 50 pips away now. And I like to be as close to support and resistance as I can. Now, if I'm not going to be close to that Kijinsen, I need to be close to another level. But being away from the Kijinsen, again, the market's out of equilibrium, and it likes to come back to equilibrium. So you could get into a trade, and then your trade pulls all the way back to the Kijinsen, and depending on where your stop loss is, it'll take you out. So that's why I definitely like to be closer to the Kijinsen, and I don't think I would do anything with this market right now. If this can consolidate here for a while, give the Kijinsen a chance to get a little closer, then there might be an opportunity there. So this market's been heading downwards pretty much for a while. So, and this is a nice level, because look back here where we hit back here. So this is like a double bottom way back here, and it hit 3 times. This is the 3rd attempt. So this may be falling through. Now you can see off of that double top where the market hit, and look how far the market hit after that double top. It took off and just dropped down. So double tops and double bottoms, they're really a lot of areas where you look for trend reversals. That's where a lot of that happens. So we broke this level, but let's see if this level holds, because this is 4-hour time frame here. So we want to see if this level holds. If this level holds and price doesn't stay down here and it comes back up, we could be looking at another move way higher again. We'll have to, that'll be in the future though, because we need to get above the Kumo cloud and all that, and then see what happens. But usually off of a double bottom, a double top, those kind of moves, that's where you start seeing the trend reversal things happening. Now if it's broken, then we're going to try to look to get into the trade short. So we don't know what's going on with this market right yet. We'll just hold off and wait and see what goes on. But always remember, look at these long wick candles at support and resistance. This one here is beautiful, right at the support level, and you would have been had a nice stop loss pretty close to the support level. Now I like to put it near the bottom of the wick, but that takes you really far away because this is a big long wick. So those are very nice opportunities to get into the market at support and resistance levels. So that's euro yen. We'll move on and check out the pound yen. All right, so pound yen, it's not presenting any kind of opportunities right now, but it has shown some nice opportunities in the past. And looking back here, you can see where this again, this Kijinsen level, very strong, and it all lined up with all the with all the Ichimoku support and resistance levels right here, all of them together at once. So when you see that, you know that's a strong level of resistance, and sure enough it was, because you had this nice wick hammer right here, had a nice pintail there, and then here you go, the market dropped. Now we have another nice wick candle right here. Then we had a bullish engulfing candle, a bearish engulfing candle right next to it. So the market dropped down, but now it looks like the momentum is dying out. You can see where the Kijinsen has flattened out, and you're getting all these really small candles. So what I'm looking for now with these small candles, there's no momentum. It's showing you that there's indecision here. So this level, somewhere in this level is meaningful. Let's take this to the daily time frame. Nothing major with this level, but we just had that breakout. So, and also on the daily time frame, look, we just had a Kumo breakout, and we do have the twist. So our future is dark. We have a dark future, which is bearish. We had a breakout here, and then we had this long inverted hammer right there. So that's the kind of a sign of maybe the reversal here, a little reversal. So if I'm thinking reversal, I'm thinking maybe the market could move back up to this level, and then this is where we'll get into a short trade. So if the market could come back to that level, let's put a line there, make that blue like the cloud, pretty much like the cloud, and then we'll look at that on a daily. So that's going to be resistance of the cloud, but you can see this long wick right here, this long wick candle, which is an inverted hammer right here. That inverted hammer, you had a big bearish engulfing candle right here off of the resistance level, and it broke through the cloud. So that was a good sign that maybe this market was moving down. But then you had this, all this happen here. So you had the hammer, the inverted hammer, which is showing us maybe this is gonna stop here, and then you're having this candle which has just developed. So we don't know this. After this inverted hammer, we need to see what's going to happen. I'm hoping that the market pulls back, because this is the level I want to get into after a pullback of breaking that cloud. Then we get into the level, get into the trade again. Now the reason that this inverted hammer is showing that the market is losing its strength is because, first of all, the market was moving downwards, right? So if the market's moving downwards and you have a bearish candle, then you have a really big bearish candle, then you have another bearish candle, and it's small, it's not that big, but it did have a long move upwards. So what that means is there's some bulls coming into the market here and driving this thing up, but they weren't strong enough to keep it up there, and the bears did bring it back down. But that shows you that yes, there's some indecision in this area because the bulls took this thing way back up here. So that means they are attempting to come into this market. So we need to see what happens. If they can come into the market and maybe drive this up a little bit, then get another breakout, or get near that support and resistance level, that level of resistance of the cloud, then we look for a nice trading opportunity. But right now, where it is now, it's not a good spot for me to get into a trade. Even on the 4-hour time frame, it's showing you there's nothing there really. The market has slowed down, it's died out, it lost its momentum. So 4-hour time frame shows you that. So we're not even going to mess with this. We'll just wait. There's no opportunity there. We're too far from where we need to be. So we just sit here and wait, sit on our hands and wait, right? So that's it, pound yen. And we'll move on, look at the New Zealand dollar US dollar next. So the New Zealand dollar US dollar looks like another market in disequilibrium, just getting farther away from the Kijinsen. We don't need to be that far away from the Kijinsen. We can't really get into an opportunity that far away. because we love to be closer to that Kijun-sen. We're 161 away on the daily time frame. So yeah, we're starting to get a distance where we need to be, but we're not that far away. Now on the daily time frame, you can look up to about 300 pips moving away from that Kijun-sen. But the thing about it, I like to be near the Kijun-sen, so that's just the way I trade. Now there's other ways that people trade. I could put my stop loss at the fractal level, because basically what's going on here, when the market's moving downwards, and I've showed you guys this a bunch of times, we're going to look at this really quick. There's a fractal level there, okay? And there's a fractal level there. Now here's another fractal level. So if the market's moving downwards, there's this one fractal, two fractal, three fractal levels. Well, the market doesn't really come back and break that level when it's really trending down, because here's this first fractal, the market moves down, it never came back to break that level. Then this second fractal, the market moves down, it never came back to break that level. And then now we made some fractals here. Now when you start seeing a bunch of fractals in the same area, that's when you know you're starting to become into a range or consolidate. Because look at these other fractals here. You don't see that here. You see one good fractal level, then you see one good fractal level, then you hear one here and one here. So now you're starting to get into a range. The market's flattening out. You could see the Kijun-sen flattening out. So the midterm momentum has died out. And you could even see it on the chart. Just looking at the chart, you see these last three candles, what's happening here. Nothing much. They're pretty much indecision candles. So the market just never breaks these fractal levels when it's going in one direction, and I'll show you going the other way. So the market makes a fractal here, and then we make a fractal level here. This fractal does not count for us, because this fractal, I'll show you in a second here. It's that fractal's in the middle. We really you want to look at a fractal that's on a swing high or low. So that's basically what, and it's the same thing as breaking the swing high or swing low. The market goes up and back. It doesn't break those levels really when it's in a trend. So here's the first fractal level. Then we had, and then the market never came back to break that level. And this is an up fractal anyway. This is the next fractal level. The market never came back to break that. It moved up again. So here's the next fractal level. The market moves up, but then now it came down and broke this bottom fractal. So we broke this bottom fractal level. Once we break a bottom fractal level, now the market's changed its direction, and I show you this in the last few videos, and I talk about this all the time. Fractals are the keys to the market. Tells you a whole bunch of things, what's happening with the market. You could see these two fractals here. That means we're in a range or consolidating, and you could surely see it. There's two here together, so we're pretty much in a range or consolidating. There's one fractal here, and that's it. The market moves back down and takes off. And when you're drawing support and resistance and trend lines or anything, you use these fractal levels, and it's just really, it's just the market talking to you. It's telling you everything with these fractals. So there's the fractal levels. I could draw that trend line just off of the fractal level. Boom, boom, and then look what the market's doing. You can find out a lot of things with these fractal levels. So pay attention to these fractal levels. And then the market's moving down. We broke this level. So when we broke this resistance here, the support level of the cloud right here, this doesn't fall in my rules as a Kumo breakout. I mean, it is a Kumo breakout, but this is one I don't take, and it was a decent trade, not bad. But I still need to have a dark future, and the future was still bright when this happened, and I saw that. So here's where 26 into the future is. So yes, you didn't have that yet. And when I saw the market slow down here, I said, well, maybe we'll get that soon, but the breakout is considered over now. The breakout's done. So here's where we changed right here, and now the future is dark. Now I just want to get a area where I can get into a trade. Now if the market pulls back to the fractal level and doesn't break it, I can look to get into a trade off of that. So you know, any support and resistance level is where I'm going to trade, and fractal levels are definitely support and resistance. They show support and resistance levels. Then you have your cloud levels and your Kijun-sen. So I don't want to be in mid-space trading, and this is mid-space right here. I'm far away from equilibrium. I'm far away from support and resistance. I'm in between a fractal support and resistance. You have this high fractal, this low fractal. So you're in between stuff. You're not at, you want to be right at something to trade. You don't want to be in between anywhere to trade. You want to be close to a support level to trade, or resistance level. And you have those levels with all kinds of things. You could be talking about Fibonacci retracement levels. You could be talking about moving averages. You could be talking about pivot points. But these are all support and resistance levels. And you need to be near those levels when you're trading. And that's not just, in my eyes, it's not just trading Ichimoku. This is just trading 101 to me. That's the way I see trading. So again, this pair is doing nothing really. We're waiting on this pair too, so let's wait and see what happens with this, and we'll move on to the Euro Aussie. All right, actually, we're going to look at the pound dollar. We're not looking at the Euro Aussie. We're going to look at this pound dollar, and this pound dollar looks just much like the New Zealand dollar. New Zealand US dollar and pound dollar are looking almost the exact same, because look at, we have this breakout here. And again, you could see this breakout wasn't ready based off of the things that I've been teaching you. Now, an aggressive trader would have taken this, and it's 26. We're still a little bit away. So the breakout wasn't going to happen. The breakout happened, but it wasn't going to be a trade that I take. And you can see what happened. It went down, but then it stopped. Now we have the Kumo twist right here, which now we have a dark future, so we could trade short. Now we need a level to get into. So like I said, when the market's moving down, it's not really going to break these fractals the opposite direction too much. Now, if we get a break here, it's because the market has slowed down, consolidated. Now, maybe a lot of times it'll use these fractal levels to turn back around and start going again. Now, if it breaks this level, we'll look again, like just like the other pair, New Zealand dollar, US dollar, to get back at this Kumo bottom right here, and hopefully maybe get closer to the Kijinsen and then come back out of the cloud. Okay, so there's a lot of things we're looking for here. This pair is in between right now. I'm not looking to do anything with this. All right, and let me show you something here. What I keep telling you guys. Let's look at this again real quick, and you'll see parts on here where you see how well these fractal levels hold. So here's a fractal level, and there's a fractal level, and there's a fractal level, and the market's just moving up and up. Now again, the fractal levels are going to be support and resistance also, so the market could come down to that level. Alright, so fractals are very big for me. I love the fractals. I'm married to the fractal. Now the fractal level is set. You could see that could be a nice area of support and resistance, so it could be a support level, and see what happens there. But you see the market never closed below this level, because basically it's following the formation of these fractals, and that fractal formation has not been broken. So once that fractal formation is broken, then that means that the change of direction with the market is also happening. Okay, so when we break a fractal low, now let's see, are there any that are broken where we would have got fooled out? And here is one. See, there's a fractal levels right here, and this is where the market was pretty much consolidating in a little range right here. We were in a little range, and you can see where it is. Let's show where that is, pretty much just in this range pretty much. So the market started ranging there, so now we're not really in a trend. So now this doesn't hold true, because when the market's ranging, then it's going to start making all these fractals all over the place, and then it starts to break some of them and then make others and break them. So it doesn't really hold true. Then it drops here, but then the market started moving here, made that fractal level. So there it made that level, and then continued on, made a little fractal level here, and then made another one right here, and that's where the market continued. Now here's where it broke a level again, but you don't see this a lot, and it didn't break it by much, and it came down to this support levels here, and then it did take off and go the other way. Now when you break that level high, because see, you started a pullback, because you could tell you have a pullback, because now you're making lower fractal levels. Alright, so the highs fractal levels, just like a swing high, basically swing highs and swing lows. You're making lower highs and lower lows, so you had a little temporary pullback here, and the fractal levels on the chart allow you to see this a lot better. And also, fractal levels do not repaint themselves. A fractal level is there if it's there. It is what it is. You cannot change it. All right, so there's your fractal level, and then the price broke it and broke outside of the cloud. That's a good trading opportunity there. Tells you a lot about the market right there when it breaks that fractal formation, because the formation was coming down here. So you saw that formation here coming down. You saw this first one, and then you saw it make a lower one here. So now you knew that the market was changing something here, because it wasn't doing that recent in the back here in the past here. And then it came down and made another fractal level down here, and it never broke these fractals right here, these three fractals yet. And then it made this little fractal level here, but then it broke that level, and then the market took off. So you have to have these fractals on your chart and look at it. You can trade this without Ichimoku system. You put some support and resistance lines on your chart, and you can trade this without any indicators or anything, because this is going to tell you a lot about the market. So this is all that I really need to see. But I'm in love with fractals, so I have to, and I'm also in love with Ichimoku, so I have to have it on my chart sometime. Most of the time, really. I like trading support and resistance. I'm in love with three things here: support and resistance, Ichimoku, fractals. I cannot trade without those, and if I had to, I probably wouldn't be able to trade. I wouldn't be a good trader at that, especially with that support and resistance. That's one of the main things, and fractals fall under the support and resistance category. I can trade without the Ichimoku system, pretty successful without it. I don't really need to, but I really like it, so why change up what I'm doing, right? So pound dollar, that's what I'm looking at. It's in between. It's out of equilibrium pretty much. It's moving away from equilibrium. So again, it's in between levels. I'm just going to wait on this. Wait till it get to a level that's of significance. When you get to a level of significance, then you can start making decisions. Right here is not a level of significance. I'm not going to make any kind of decision right here. Okay. You have this psychological level at 6,800, but nothing major. You could see nothing really happened at that level prior. So we'll just wait on this. This is the pound dollar. We're going to move on probably to the euro pound and see what that's doing. All right, so yes, we will check out the euro pound on the daily time frame, and I'm going to show you again how the formation of these fractals really help us out. So you could see this, and also there's some other signals on this chart that I want to show you. But first of all, look at the market is in a downtrend, and look how it stays beneath this Kijinsen here, because that's the level of equilibrium, but it pulls back to equilibrium so often. You see that, and it pulls closer and closer, but then it never breaks these fractals. So let's do the same thing we did for the other pair. Let's put all of these fractals, because there's a bunch of them here. We're going to put them all in here. We never really break these levels. All right, so the market goes, we made a fractal high, the market goes down, never comes back to break that level. Made the fractal here, market moves down, never came back to break that level. Moves down, makes a fractal here, never came back to break that level. Moves down, makes a fractal, never came back to break that level. Moves down, makes a fractal. Now, it didn't come back and break that level, but now it's starting to do a few things, and actually it did break that fractal. It's very close to breaking that level. That fractal level is very important, because look at this. You could see your support and resistance right here. So here's this support, and then you could see the fractal level resistance. Now the market broke through, fell down, and now we have to see what this is going to do now. Is it going to go higher or is it going to go lower? So the thing about it, it came close to breaking that. So that's pretty, that's close. But then one other signal is it broke this Kijinsen and it went on the other side. So now the short-term momentum for the bears has taken, for the bulls has taken over. So the bulls have started to take over this market here, because they pulled price on the other side of the equilibrium. So above here is the bullish equilibrium, and below is bearish, because above this is going to be, for the past 26 periods, the average is going to be higher than the past 26 periods. So we know for the past 26 candles, now our average is higher than what it was, because if it was the same, it would be equilibrium. That would be our average. Well, the bulls have started to take control because now the average is higher than we're higher than the average, if you can understand what I'm trying to tell you here with this equilibrium thing and with this Kijun-sen being a point of equilibrium. The market's going to be in equilibrium. It has to come back to equilibrium because you can't have always sellers and always all buyers. It can't be. Sometime it becomes close to neutral where there's both, you know. Maybe one time you have, just for say, you have 1,000 sellers and then you have 1,000 buyers. Now you're in equilibrium, and then it starts to become 1,500 sellers and 500 buyers. So now you're starting to move away from equilibrium, and it's starting to be, you know, they're starting to take over with the bears that way. So now the market's becoming bearish, and then your price will drop below the Kijun-sen. Okay, so then that lets you know that the bears are in control of the market. Okay, because now you get below that Kijun-sen, so the bears are in control of the market. But now we're above the Kijun-sen. So here we're hanging around that Kijun-sen. Now the thing is, we broke that Kijun-sen level, and we pretty much broke a fractal level. We have a lot of resistance above us, but this is starting to give us signs. And that's what you have to look for, signs in the market. Signs in the market that it's changing what it's doing, signs that it's going to go the other way. So one sign is breaking a fractal level, the second sign, the other sign is breaking the Kijun-sen level and breaking these support and resistance levels. So now you can see how that this is a nice support and resistance level. So it held here, came here, and it held there too. It faked you out and came back down. So we're going to wait and see what happens here. Pretty much, again, this is a market that's we have to wait on now. We have to wait and see what's going to happen. It's right at a level where it's going to speak to us. It's going to have to do something here. It can't stay here forever. So it either has to go up or it has to go down. So we'll wait and see. And that's the euro pound on the daily time frame. All right, so now we're at the CAD Swiss franc, and we're moving backwards a little because I want to take this back and show you guys something. Then we're going to go to lower time frames. I'm going to show you another thing. Okay, so we moved back, and you could see again, you could see the same formations forming with these fractal levels. I keep pounding on these fractal levels just like I pound on the Kumo breakouts, because these are things that work. But to see the market, you have to see the big picture. So you can't be really tight in here. You need to see what's really happening. You can't just be looking at the market like this. You know, this is hard to tell what's going on looking at the market like this. You need to see the big picture of the market, and then you could see what's really happening with the market. Okay, so looking at that, you could see the fractal formations, and you can see a clear downtrend, and you can just see each fractal level being made and broken. Okay, now I want to look at the lower time frames and look at that. Now you're going to see these fractals no matter what time frame you are, but again, I'm going to tell you that I think if you can trade the lower time frames, then you're a great trader because you could really see the market and you understand the market, what it's doing. I need to see more of the market, so I need to see the whole picture. So for me, trading is a daily thing. It happens all day long. So the candle goes from one day to the next day to the next day. So you get the big picture if you're looking at what happens that whole day. If you look at what's happening for 1 minute of the day, you're getting a very small picture of the market. And then if maybe you go 10 minutes, you're getting another very small piece of the market. You can't really tell what's going on with the market. So basically you're just trying to get some pips. But now let's go down, let's go all the way down to the 1 minute. And you can see it still does the fractal levels, but this looks crazy. This is hard to trade. This, if you ask me, it's all over the place, and I can't trade this myself because this is too much, too much nothing here. And then the market moves a little bit here, and then you have consolidation, and then you have a little move down. And this is just, you could still see the breaking of the fractal levels, and it doesn't break the fractal high again. But really the formation and the price action is very hard for me to trade this. Now this is a little cleaner here, and you could see fractal level, and then fractal level. So yeah, the fractal levels are still there, and they still hold true, do the same thing on every time frame. So this is the 1 minute, you could see that. So here's the 5 minute, Now things become a little bit clearer, a little better than they were before. Okay, so you could see that. You can see your fractal levels. Still the same thing holds true. You know, you have a higher fractal, then a lower fractal, higher fractal. So it still holds true. So let's move to the 15-minute. And see, this is a lot of garbage. It's just nothing that you can really trade. And then you got really big, big pintails here. And again, I don't really like trading this lower time frames. Here's, you can see the little bit of formation here. No real trend yet right here. So let's see where a trend is that we could really judge it. This is stuff I really can't trade. Okay, so yeah, this is really tough for me to analyze because it's just so sloppy and it's all over the place. 15-minute time frame here. And you could still see the fractal levels though. Now you could see, I know that this isn't a range here just because you have these fractals. Now we never really broke this level here. All right, and then the fractal moved down, came back up, made that fractal close to this one, so that's a resistance level. Then it broke this fractal level, so the market must be moving downwards. Well, the market makes another fractal level down here and makes two of them, and then it starts to go the other way. Okay, but this stuff is really, I need to see a bigger picture. And when I move out, I still don't get what I want to see. So this is because I don't look at this time frame. So it's now we moved out to the hourly time frame. And you can see all these fractal levels, so you know the market's ranging in here, and you can even just see it. But it made this higher fractal level, never really broke it, made another level that came close to it, came up right at to it. So again, that's why these levels are strong support and resistance. You could see where the level came. All right, so let's show that here. This fractal level right here. This candle came up, it knew you were there, so it came a little bit through and took you out and then dropped lower. But you could see that level holds as a resistance level if the market's going in form with the formation of the fractals. And here it is. Okay, so it goes down, makes this fractal level here. It made a fractal level there also, but it made this one is more significant because this one was in a little ranging area here where we start moving in a trend, and it starts making that fractal level. I don't like this fractal level, but it still didn't break that fractal level. It made this fractal level right here, and it held true. It never broke it. Never broke that last fractal level, and then made fractals the other way. So you know that you're here. We became in a range without even looking hardly. You can see we're going to be in a range because I can see that first coming down. We never broke this level, and we never broke this level, but then we made a fractal here and came back down to support, but then we broke this fractal level, so now we're going the other way. And if we're going the other way, we still need to break this fractal level, and we never did that, so we stayed in between that fractal level. So we're in a little a bigger range here for the hourly time frame, and we come right back up to that level. Now when I didn't even see that level when I put this in, I put it in based off of this right here, this fractal level. And then what happens, price comes right up to that fractal level back here, makes a long wick, takes everybody out who thinks it's going longer, and then drops down. All right, so the fractal level, again, telling you a lot of information. Fractal level resistance points. Okay, so it's telling you a lot of information. Now here's where it fools you. If you look at this level instead of the level that we made back here, because you're looking at the next previous level and you see it break this level and then make this really long move here, you're probably ready to jump into the market. But again, it's not a, you have to have a way to get into the market and a reason, and there's no reason here. I mean, we broke this level, so yeah, it's a breakout. That's what everyone says, it's a breakout, but it fooled you, it faked you out and came back down. So usually on my breakouts, I do breakout trading, but not as much. I really want to see a breakout and then a pullback to the level, because that's what the market really does a lot of times, and you can see that in the formations of what it does. And if you look at the market a lot, what it does, it usually breaks resistance or support and comes back to it, and then it takes off. Where here down here it broke through this level, came right back to it, and then now it took off again. See, so it broke this level after it faked everyone out, broke this level, and then came back up right here and hit it, and then dropped down. So that's the way I want to look for trades. I want to make myself closer and make sure that which way the market is going. Now, it's not a sure thing to say to make sure where the market is going, but it gives me a little more of an idea. It's because I know that's a pullback, and then the market may continue the other way. All right, so that's what I look at. I showed you the lower time frames here and just how hard they are for me to trade because just because of the price action so scattered and stuff. Now 4 hour time frame, I get a lot better picture. You can see the fractal formations developing much better, so I can trade that better because I see what's happening with the market. I know what's happening with the market better. Okay, and but these levels hold true no matter what. This line is here, it's been there, and you can see what's happening on the bigger time frames, same thing. And then we go to the daily, and now the daily is really telling us what's going on with the market. And you can see we came below this we dropped below this Kijinsen here, so we're inside the cloud. Looks like this support, this resistance level may hold, so we'll be looking for a Kumo breakout maybe eventually. Looks like we may have a twist developing, and by the time this breaks through the cloud, we will have a Kumo twist, which will be bearish. And if it breaks outside of the cloud, that will be a good trading opportunity, because in order to break outside of the cloud, it will have to break this fractal level right here, which means that it's breaking this formation, and the formation's going lower because we came higher here, and then we dropped down and we came slightly higher here. Now this is almost like a double top. That's a lot of times where you see the formation change up. Now this isn't a real double top because it's not as far away, but actually on this is the daily time frame, so it's a decent little double top, and you can consider that in the market. That's where you see a lot of change of direction with a double top or a double bottom, and you have that here. So the market made a fractal here, and then it made this fractal level. I don't take this one valid. I like it to be more of a pullback point, and then the market makes this fractal level. This is more valid. So when it comes down and breaks this level, now we know the market is moving downwards. So if it breaks that level, it'll also break outside of the cloud. That'll be a Kumo breakout, and that'll be a very good opportunity on the CAD Swiss franc if you trade the CAD Swiss franc. Okay, so that's looking in the future at the CAD Swiss franc sometime next week, maybe, or maybe not. It may take longer than that to get outside of the cloud. This is all turbulence, so we want to get out of there, wait for it to get outside of there, but look for those things that I've been telling you. All right, so that's CAD Swiss franc. I'm done with that. All right, so we'll look at this last pair. My least favorite pair of all of the markets is the Euro US dollar. I I don't think I ever traded in the last few years. Do I ever trade the Euro dollar? But maybe once or twice here and there. I look at it sometime, but now it's a pair that I barely even have on my list. But sometimes people ask me to look at it for them, so I do check it out sometime. But guys, this is stuff that I can't make up. This stuff is there. It's not something I can go, let's go find this on a chart. You can see this happening all the time. So this euro dollar pair, first of all, we're going to look here. The market moved down here and it made this fractal level. It never breaks these fractal levels, but it breaks this lower one, so it's going lower. But one of my students that that I'm training, actually we used this pair and we were looking at this, and I'm going to show you the things that I told you on that last chart. First of all, look at the fractal formations, okay, and look what's happening here. So now you make this fractal high, then a low. You never break this low. You make a fractal high, then a low. Now you break this low, but it continued to make a, this was a pullback move really, because look at how tight these fractals are. It made a fractal here, broke it lower, made a fractal here, and broke it lower. So it was three fractals that it broke. The third well, it broke two fractals, but the third fractal is when the move went the opposite way. Now when it went the opposite way, it made a fractal higher, made this lower one, then made a higher fractal. Here it made a double top. So I drew this in to show my student why I like to make zones for support and resistance. Now first of all, you could see this is a clean double top right here. Alright, if you just draw one line, this is clean right here, but you could see the wicks coming through there. So I like to include the wicks. That's why I make this a zone. So if price ever gets back up to that level, this is a zone for me, and I have to be on the other side to trade it, or on the bottom to trade it. So I don't want to be in between that zone to make a trade. I know that that's inside the zone. I don't want to trade. So then again, looking at that, after it hits that double top, and I told you guys a lot of times when you see a change of direction, with a trend, when you see the change of direction, it's going to be coming off of a double top or double bottom. That's not all the time. That's just one of the signs you could really look for, and it's a really good one. You could see double top. Here's this first hit, then the double top, and price drops way down. Price dropped way down after that double top. And a lot of times it does drop really far down or moves up really high, and that's 600 pips it dropped down. All right, so this is the euro dollar. And then someone else had asked me about this pair and asked me about trading it, and to me it's in between. It's getting out of equilibrium. It's not that far from equilibrium, so it's still tradable. It's still tradable, but the only thing with it is, to me, let's see how many pips that is. It's 126, so we're half of what we really think the maximum is on the daily, just about 300 pips, so we're almost near half of that. Um, this market could continue to move down. You're away from that level, but again, I told you the fractal levels are still strong too. Those are levels that you can look at really hard. To me, they hold so much weight, so this is stuff I definitely cannot make up. It's stuff that you can see in the market. It's just stuff that basically you guys need to train yourself to see. We don't need the Ichimoku system to show us anything with this stuff. Basically, we need support and resistance levels to show us a lot of this. So you have your support and resistance levels here, and you can see where the market moves. So the market moves between support and resistance levels. The market dropped down to this support level right here. Then it broke through, then came back up and held true for a minute and then dropped. So these are the levels that you want to look at: support and resistance. Look at what the formations are doing with the fractal formations, and just trade. I don't know, guys, just trade. It's hard for me to tell you what to do or how to do things, but I just show you what I do. So a lot of the things that I'm showing you, these are things, everything that I show you is things that I do, and they're things that I teach people to do. So these are things that I think you should be looking at, and I think they're very important. I'm getting so many calls. I don't know what the deal is here right now. I'm gonna have to turn the phone off when I make a video because it never fails. It rings all the time. But I think I'm about to end it right now. Guys, you could look at this chart and just see all these things that I've been telling you. They just are really true, and it holds a lot of weight. So I'm gonna end right now, but guys, just really let you know that come visit my site. It's fx at oneglance.com. fx at oneglance.com. And I'm really getting that thing off the wall right now. So just come check it out. I'm going to be putting a lot of things in there, a lot of updates, and a lot of information for you. So it'll be a place that you want to at least try to visit once a day, because I'm going to put so many things in there that you guys can have so much to come back to and so much to learn from, that you know you'll be able to come there and enjoy it every day. So it's getting off the wall. It's starting to get going. So just come and check it out. fx at oneglance.com. All right. So till next time, traders, have a great trading week, and God bless. So long.